The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
So anybody who has been following crypto news in 2021 knows that one of the biggest stories has been crypto regulation, specifically crypto regulation in the United States. In fact, we could say this was the year that Washington finally woke up to crypto. We saw a few very high profile hearings. We had a crypto provision temporarily holding up a massive infrastructure bill. So I can't think of anybody more appropriate to talk about this massive trend than SEC Commissioner Hester Peirce, who is also wildly popular in the cryptocurrency community. Welcome, Commissioner Peirce.
Emily, it's great to be here. Thank you for having me.
So thrilled to have you. Perfect way to end the year. So let's start with kind of taking a wide look at the SEC. So one of the biggest changes in the SEC is that it has a new chair, Gary Gensler. This happened earlier this year, and you've been at the SEC for a while. So you can take a comparative look at the SEC under Gary Gensler and under his predecessor, Jay Clayton. And so could you just give us a sense of what's different in terms of the tone or just anything? What are the differences between these two leaders?
Well, and I should start out by saying that the views that I represent are my own views, not necessarily those of the SEC or my fellow commissioners. I think that's well known by now. It is true that we've had a change in leadership at the SEC, which I think has affected every area, including crypto. So part of it, I think, is due to that change in chairman, but part of it is due also just to what you mentioned sort of at the outset, which is that Washington is really waking up to crypto. So I think there's a realization that crypto is not going away, and so there's going to have to be some sort of regulatory reckoning with it. And so the timing of Chair Gensler's arrival at the SEC was quite, I think, fortuitous from that perspective, because he did come to the SEC with experience. He taught courses around crypto and financial technology. And so bringing that knowledge in, I think, was very helpful. Now, I think the most notable change has been that Chair Gensler has said, look, I see everything as being a security in this area, which means that everyone needs to come in and talk to us and register with us who has any kind of involvement with digital assets. And that's a much more aggressive, I would say, regulatory stance than what we saw under Chair Clayton, where there were certainly enforcement actions, but there was less of this view of let's actually build a regulatory framework for this. And so I think that's kind of where we are right now, is that Chair Gensler really wants to build a regulatory framework.
That's interesting. Yeah. So you raise a really important point that it's a little bit hard to compare the two chairs just because the crypto environment has changed so rapidly. So there's actually a lot more to keep track of now. But one of the things that there was a lot of excitement about Gensler coming in, precisely because you said, he taught courses on this. He knows a lot about cryptocurrency. But there are definitely some people behind the scenes that are saying the SEC, or even not even behind the scenes, they've said it actually on the show, that the SEC has become more enforcement oriented than ever before. Some have actually used the words repressive. I'm just curious how you respond to that, because there is a sense among some crypto insiders that the SEC is actually sort of cracking down on crypto in a way that it hasn't in the past.
Well, I've been pretty outspoken about the fact that I think the agency has taken the wrong approach to crypto. I mean, we have an opportunity to sit down and work with people, many of whom have been very open about their willingness to come in and work with us and develop regulation that makes sense. And so far, we've really provided very little concrete regulatory progress. What we've done instead is we've brought one-off enforcement actions. And of course, when there's fraud, enforcement actions are appropriate. That it goes without saying. But I think when you're dealing with a situation where two parties are engaging in a transaction they both find mutually beneficial, why don't we then sit down and say, all right, what are our regulatory objectives, and how can we achieve those regulatory objectives in a way that still allows these people to engage in these transactions? Now, it is a difficult situation because some of the lines are very unclear. It's not clear whether we might have jurisdiction over some things, whether the CFT, the Commodity Futures Trading Commission, might have jurisdiction, or the banking regulators. There's state regulatory involvement as well. And so given that it is difficult, but we could certainly have done more than we have. I mean, just as one example, when you're talking about broker dealers trying to interact with crypto, a year ago, we created a special purpose broker dealer option, which is great. And that was progress. It was a small step, but it was progress. But even moving that forward so that people can actually take advantage of that has been painfully slow. And that's because the SEC needs to do more to answer some basic questions around how that would actually work. So I'm hopeful that we will sort of set our minds to work at building something that makes sense in terms of regulatory clarity instead of just always falling back on enforcement.
What do you think is the holdup here? I mean, what's causing this kind of enforcement-oriented attitude? Is it actually that, trying to protect investors, particularly smaller investors who are getting into the market, or is it just sort of keeping to the status quo, bureaucracy? What do you think is the main driver of the SEC's attitude, or at least the aspects of the SEC's attitude that you find frustrating?
I think there's a mix. Certainly, my colleagues at the SEC are very interested in protecting investors, and so that is motivating what people are doing. That said, I think with a new chair coming in, there's a whole new regulatory agenda that comes with him. And so that's a very busy regulatory agenda. Crypto is one potential piece of that agenda, but it's not the centerpiece. And so one place that I've observed a hole is that we put out a regulatory agenda for the agency, the chairman does, and there's nothing about crypto on that regulatory agenda. So why not put something about crypto on there? But I think what happens is that you end up dealing with things after the fact because people at the SEC are trying to get their hands around and their brains around where does some of this stuff fit within our rules. And we do have rules and laws that are very flexible. They're intended to be very flexible. And so when people come in and say, wait a minute, crypto's different, we need special rules here. We need rules that are tailored for crypto. There's a natural pushback to that because the SEC is, again, has existed for a long time now and has managed to accommodate new technologies as they came along. I would argue that there are some unique aspects of crypto that counsel for specific rules that take advantage of certain unique attributes that are helpful from a regulatory standpoint, transparency, everyone comes to crypto on the same terms, those kinds of things. And there are also some challenges in crypto. And so why not use our very broad exemptive authorities to craft something that works in this space? But there's just this inherent, there's an inherent pushback against doing anything special for any new technology.
So that actually brings me right to your safe harbor proposal, which is, a very bold proposal that many people in the cryptocurrency community were excited about, basically saying that cryptocurrency projects would have kind of a 3-year safe harbor to kind of build out their project without being subject to federal securities laws. And then earlier this year, you came up with a Safe Harbor 2.0, which you actually put on GitHub. And what's the status of that? Because we haven't heard much about it since then.
Well, I would love for the SEC to move forward with something like that. Again, I'm not wedded to the particular safe harbor that I put out, but I think something that allows people to do a token distribution event without fear that there's going to be an enforcement action down the road. That's really important. I haven't been able to get traction with my colleagues at the SEC. In fact, my colleague who addressed it in a speech, Commissioner Crenshaw, she addressed it in a speech recently and dismissed it as unnecessary and potentially not helpful, harmful to investors. So I don't think that that's good progress. But that said, the ranking member of the House Financial Services Committee did include it in a bill that he proposed, and so there is some interest potentially in it, and I'm still hopeful that I can convince my colleagues that it both achieves their laudable investor protection objectives and also allows for the technology to move forward. So I think we need to continue having this conversation, and I think the fact that my colleagues are at least engaging with it is positive.
Let's just move to NFTs for a moment, because NFTs were one of the biggest trends of 2021, likely to continue to heat up in 2022. Do you foresee NFTs falling under just coming onto the SEC's radar and potentially being classified as securities?
That's a question I get more and more now. The NFT growth during this past year has been impressive, and I think it's natural that people start realizing that given the breadth of the NFT landscape, that certain pieces of it might fall within our jurisdiction. I think as people have learned, our definition of security is quite broad, and so people need to be thinking about potential places where NFTs might run into the securities regulatory regime. It's difficult for me to say specifically where those problems might occur. I've talked about fractionalization of NFTs in the past. I think that's an area where people do need to be careful. I think we'll see during 2022 an increasing financialization of NFTs because these are valuable assets and people are trying to figure out ways that they can use these assets to achieve their other financial goals. And so that, again, is an area where I think financial regulation might intersect with NFTs. And then as NFTs, people experiment with NFTs to use them in the financial space, for example, as representations of ownership, or if they carry with them governance rights, those kinds of things, you might again look to see whether the SEC's rules are implicated.
And Commissioner Peirce, something that I'm sure a lot of our viewers are wondering. So one of the major landmarks of 2021 was the first ever Bitcoin futures ETF in the United States. And I think a lot of people are asking, okay, where's the spot ETF? What do you think are the prospects for a Bitcoin spot ETF in 2022?
I mean, I will say that I can't believe we're still talking about this as if, waiting for one to happen. It's I think, progress that there was approval of Bitcoin futures products and that those have begun trading. But a lot of people have pointed out that those products are really not substitutes for a spot Bitcoin ETF. And so what are the prospects? We've issued a series of denials even recently, and those continue to use reasoning that I think was outdated at the time that it was used, and I think is even more outdated now. There's no recognition of the fact that this market is a highly arbitrage market. It's a very it's a market that's operating 24 hours a day. It's not this market that we're describing in the denial orders. And there is a futures market. So given all of that, and given the fact that other countries have already launched these spot products, we haven't seen problems there. It doesn't make sense to me. Of course, we have to consider each one on its facts and circumstances, but I don't understand the denial. And so that leads me in a very long way to answer your question, which is what are the prospects? And it's just hard for me to predict, because I don't really understand the grounds that for denying them. And so I don't understand what it's going to take, short of having Bitcoin markets all regulated the way our equity markets are regulated. That ties back to what we were talking about earlier, which is that Chair Gensler has said he wants to see platforms registering with us. And so maybe that's what it takes for a spot product to get approved.
Just a quick follow-up on that. So one of the main arguments against Bitcoin spot ETF has been this argument that there's too much market manipulation in the spot market. Do you think that there's any evidence supporting that claim?
Well, I think that markets of all kinds have manipulation. Even the markets we regulate, we bring manipulation cases. And that is something that, it's not great for a market. That's why we care about it. And that's why people in the crypto world should care about that as well. But I think that the question is, can you build a product on top of the Bitcoin spot markets that can trade in our regulated markets and be, and meet the qualifications for trading in those markets? And I think the answer to that is yes. There's been a lot of research done on how the Bitcoin markets work and what their interaction with the futures markets are. And so I think that we can look at all of that research and take that into account.
So just to turn also to one of my favorite topics, meme coins. You were on the show earlier this year. We talked a little bit about Dogecoin. Since then, it's just the meme coin explosion has just gotten even bigger because now there's not only Dogecoin, there's all these other dog themed coins like Shiba Inu that are, have a year-on-year percent increase in the millions. What do you think about this? How concerned are you about this, about just this explosion of new coins, meme coins, people joining in via social media, a lot of new investors getting into the market, the massive volatility? Is this a concern for the SEC?
Well, it's certainly a concern in the sense that any environment like the one you described is one in which there are opportunities for bad actors to take advantage of other people. And so we do pay attention to that. And that is a concern for me. I always counsel people to be careful about how you spend your money and think about what you're doing. Now, if you are going into it eyes wide open, that's fine. But I do have concern for people who aren't going into it that way, but they're more just following what everyone else says or following what a celebrity says. So yes, there's a concern, but I also think that sometimes we treat people as if they're children, when in reality, a lot of them are engaged in this, fully knowing what they're doing. They're having fun with something, and that's fine too. It's just that if there is a problem, people may come to us at the SEC, and that's why we're going to be thinking about it ahead of time too, and trying to send the message to people: please be careful. Please think about how much money you're putting in and whether you can afford to lose all of that money.
So in the past, the SEC, and I believe you in particular, have encouraged crypto projects to kind of come in, talk to the SEC, get to know people, and given the current environment, do you still recommend that crypto projects do that? Because some crypto projects have complained that either they've come to talk to the SEC and, nothing has come of it, or at worst, maybe they could just get on the radar of regulators in a way that they don't want to be and actually get into trouble. What is your advice for crypto projects that want to make it in the US? Is going through the front doors of the SEC the best path, or are there other things that they should do?
Yeah, I mean, Emily, that's a fair question to ask. And I do still tell people to come in and talk to us at the SEC. I think it is the best course to come in early and to talk to us. But again, I think we would be rolling out the welcome mat in a much more productive and proactive way if we actually then shepherded people through the process so that they could actually do what they were trying to do in a way that achieve the objectives of the securities laws. And we allowed them to do that quickly so that people would see, wow, when I come into the SEC, not only do I get through the process quickly, but I actually can build my project and I don't have to worry then about the regulatory aspect of it. So until we provide some real concrete examples of that, I think people are going to be reluctant to come in, and that's really unfortunate.
So you mentioned earlier that one of the problems that the SEC faces is that crypto is just one thing on a very crowded agenda. And so that's part of the problem. The other problem is that you have all these different agencies in the United States regulating crypto. You have the SEC, you have the CFTC, you have Treasury. It's confusing, right? And this is something we've talked about before. So there has been a growing chorus of people who are saying we need one regulator for cryptocurrency in the United States. I believe Senator Lummis is proposing something along those lines for next year. What do you think about that proposal, the idea of having, a one regulator that really looks over crypto, kind of more similar to what we have in Japan, for example?
Yeah, I certainly understand the impulse to call for one regulator. I have a couple problems with it. One is, typically in Washington, when you build another regulator, all you get is all the existing regulators plus one. And so, we have our jurisdiction and we're still going to be looking for ways that it touches crypto. And then there's going to be this new crypto regulator. So that's one concern. The second one is that I think, and it's hard for me to predict because, again, I'm a regulator. I'm not a technologist. I'm not someone who has the vision of a creator in this space. But I think a lot of the world is going to be built around crypto and on crypto in the future. And so if that is truly the case, then I don't know that you can have one regulator for crypto because it's going to touch on so much of what we do as a society. And so I think that might actually be quite complicating to have just one regulator in the area. But, we'll see. I haven't seen how this would play out specifically. And so I'd want to think about it in the specific context that it was being proposed to really think about how it would play out.
So another element of the crypto economy that has become headline news in 2021 is stablecoins. And I think we're going to see a lot more talk about stablecoins going forward in 2022. Now, some critics of stablecoins have raised the alarm saying that they will bring systemic risk. You could have a kind of bank run, that some of the major stablecoin issuers are not backed by fiat currencies to the extent that they say they are. How much of a risk do you personally think stablecoins are, in your personal view?
Sure. And let me just go back one other point on the single crypto regulator, which is, I think, one of the drivers for people calling for that is that there's been a decided lack of interest in crypto until this year. And yes, now people are starting to become interested in it, but the learning curve is really steep. And so I think there is an understandable view that if you created one agency, you'd have sort of a group of people there who really spent a lot of time thinking about it. Maybe we can help solve that problem through better education of existing regulators. I know at the SEC we have people who are getting to know the technology better, but we all still have work to do. So that may be one driver of it. With respect to stable coins, I think it's good that regulators are taking a look and saying, okay, we want to understand what these are. There's been a lot of growth in this area. But I think that there has also been a real unwillingness to appreciate the value that stablecoins serve in the crypto world, that they serve in DeFi, and that they might serve the broader economy and the broader society. We talk about a central bank digital currency, the possibility for that. I point to stablecoins and say, why not just rely on stablecoins instead of trying to create a central bank digital currency? We've got a private alternative. People will point to the history and they'll say, well, these types of private banking initiatives didn't succeed in the past. I think there's a lot of false history being written about that past time and the role that regulation played in some of the failures. But I think putting that aside, why not have to sort of follow the American way, which is to have private competition in this space? Now, do we have to think about some of the concerns? Yes, because if stablecoins grow larger, we're going to want to think about what's the right regulatory framework. Is it a framework that would just provide for transparency so that people would understand what the reserves are actually backing stablecoins? Is it a more bank-centric framework? I think the concern there is that then you would drive all issuance to be just by regulated banks, and that may sort of prevent some of the dynamism and some of the innovation in the industry. So I think we have to think clearly about what the regulatory concerns are and what the financial stability concerns are, and it's not to say there aren't any, and what the investor protection concerns are, and then design a framework that makes sense but also recognizes the benefits.
And, related to stablecoins is the rise of decentralized finance, or DeFi. Do you see that becoming a regulatory issue for the SEC in 2022?
I do. I think the SEC is having a hard enough time with centralized crypto and confronting decentralized crypto. Decentralized finance in crypto is even more difficult. So I think, again, there's going to be a real need for education here. I am concerned that people aren't appreciating the value that DeFi has now and the value that it's likely to have in the future in our financial system, not only in the sense of making the financial system more accessible to more people, but also making it more efficient. Removing intermediaries, I think, will be a good thing for people. And so I hope that whatever approach we take does not effectively try to force centralization, force intermediaries on DeFi, because that's what we're comfortable with as regulators. I would like for us to be able to have some of these conversations around the unique aspects of DeFi that make it maybe appropriate to have a different kind of regulatory structure around it. But I fear that there will be this forcing of it into the centralized mold that we're so used to.
Commissioner Peirce, finally, thank you. First of all, thank you so much for such a wide-ranging analysis. Just one final question. One of the problems I think the crypto industry has faced, and we saw this a lot with the infrastructure bill, is kind of a messaging problem, right? It's like, why should lawmakers in Washington care? And cryptocurrency advocates will say, if you guys don't do something, crypto is going to leave the U.S. But I think there's a lot of people in the U.S. who don't understand why that would even be a problem. And you're always very good at sort of articulating this bigger picture view. What is your argument to Washington for why we need the cryptocurrency industry here in the United States, why we don't want to chase it out?
Well, one piece of it is just that we all in Washington work for the people in the country, and a lot of people in the country find there to be value in crypto. So I think that's just a very basic reason for why we shouldn't be so dismissive of it. But more broadly, I think there's real potential for crypto to transform our lives for the better, whether it's from the financial aspect, where it really is seeking to address some of the problems that have plagued us for a long time, which is access to the financial system being available to everyone. It's the expenses associated with participating in the financial system. Can we eliminate some of those? And then there also are really exciting opportunities. We didn't talk about DAOs today, but they're really exciting opportunities for bringing people together to coordinate their activity in new ways, in ways that will allow for broader participation. And those kinds of things really matter. So why wouldn't we want people to be building these things in the United States and to be involving U.S. persons in them? I think it's hard for me to predict what the future will hold, but our country should always be one that is a great place for people to experiment. We are built on the notion that it's okay if things fail, because from that failure come lessons for how to build something new and better. And so while people may scoff at some of these initial experiments in crypto, those are going to be the roots, I think, of things that really end up transforming society in the long run.